Hello, this is Richard Smith at American Acceptance Mortgage, and what a wild ride today. I wanted to take a minute to kind of show you what happened. This is the last 4 weeks in the bond market, in the mortgage bond market. If you notice, we had a high here, which may very well have been the low, the bottom. That right there may be the bottom of interest rates. Since that day, we've had a pretty steady drop in the bond market, and when bonds go down, rates go up. Today was right here, and we had a huge recovery in the bond market, which pushed rates a little bit lower today, basically in line with where we were the first part of August. What has happened is that we've basically got this hill-looking formation, a hill, and what has happened is that the investors are turning bullish towards the stock market. One, because of some very minor economic reports that had some positive news, but primarily because when bonds get this high, that's really too low for investors to feel very safe. You go to bonds for a safe investment, looking to the stocks to give them any kind of return. Basically, if you notice this hill formation, compare that to this S&P 500 where you've got a valley formation. It's just the exact inverse. The interesting thing today is that this little thing right here is today. The S&P 500 and the Dow and all the stock market indicators went up just as the bonds did, which is great news. It doesn't happen very often that the stocks and bonds both go up. So what we've got are two things to fight. One is investor sentiment, which is really bullish towards stocks now. And the other thing is this low yield when bond prices are this high. Those are pushing the interest rates lower. Of the recent weeks, though, or the last several days, we've had very little in the way of economic news. This week, that will change. We have the retail reports, retail sales tomorrow, producer price index this week. We again always have initial unemployment claims, and then we have consumer price index Friday. This is a very, very hectic week in news. If the news reports are negative towards the economy, then rates will move back up a little bit. If the rates are at all positive for the economy, which would be good news for us all, no doubt, then what we're going to be faced with is this improvement from today is going to go away, and I'm afraid bond markets are going to tank even further below this level, and rates are going to start moving back up. What I'm saying is I think we've hit the low here. I think we've hit the bottom. I could be wrong, and if the economy really tanks, then I will be wrong, and bonds and rates will move back up. But for the next few weeks, I'm thinking that we've hit the bottom. This is Richard Smith, your Chattanooga mortgage expert. Call me at 280-0345. And listen to Real Estate Radio Chattanooga each Saturday on 102.3 The Talk Monster from 3 to 4.